What is going on, everyone? I don't really have an agenda or a plan for this video. I'm just going to go over some price structure, some of how I use Fibonacci's with the dots. And so a lot of this is just very, very straightforward. So this is a 1 minute chart of the NASDAQ futures. We have New York dots above, London dots below, but you can disregard the London dots. And so what I want to look at is just simple price structure. You have the market opens at 9:30. 9:30, we have a high, we have a low, we have a high, we have a lower low. And so I want to combine how I read price action with the dots. So the dots are all red. You can see 4 rows of all red dots starting at 9:42-ish. So you have a high, you have a low, you have a retracement here. So I just pull up Fibs and see what sticks. So from the open to the low, this 50 to 61.8% level is an area of interest. It's not a limit order, it's just an area of interest. So I want to see this hold. And again, dots are bearish, so I'm looking short. My narrative, my bias is bearish. So we have a high, we have a low, we have a high, we have a lower low. And so once you start to see this kind of structure, again, you just take Fibs and you see what sticks. So we got a retracement to this 50 to 61.8 level. We couldn't close above it. We could hardly close above it over here as well. And you use something additionally as a confluence, NQ stats, initial balance breaks, which is where's price at 10:30, the first hour of trade relative to 50% level. So you just stack, red dots. You have price making lower highs and lower lows. Again, the dots are red. You have 50% to 61.8 levels holding. So that helps to build a narrative. You have NQ stats, initial balance, low, where you anticipate lows to get hit. So you just want to stack confluences and then find an entry function that fits that narrative, that fits that confluence. So that's kind of how I looked at the opening 2 hours or so. And then what I just wanted to briefly talk about was also, again, I don't have any plan for this video. So once the morning closed, you get to noon. There's something called the noon curve where if a new low was made in the second quarter, so the quarter is defined as 8 to 10 a.m., and then if a new low happens after 10 a.m., then there's a higher likelihood than not then that the morning lows, from the 10 a.m. to noon quarter, that these lows should get targeted. So again, you just take a good old trusty fib from the 9:30 open to the lows. And so you have your 50% area holding here. You can see we had a false breakdown. We couldn't deliver. Noon happens. We get a retest of the 50%. We have the VWAP. We were below VWAP. And you can see this is the target. And you just stack, again, confluences. You have the 50 to 61.8 level holding. You have the noon curve potentially in play. You have dots flickering red. So we had red dots here, and then there's like a little smaller high to low 50% level. So price likes to move in these 50%-ish kind of retracements. So dots get red here and here. So you're just looking for some kind of confluence, a one dot entry function here where you're selling the close of the 1 minute candle that lines up with all red dots. You know, stop above a relative high. That would have worked to noon curve low, one dot entry function here. That would have worked till noon low. So it trades here, and then again red dots, and then you just see what happens with pullbacks, and you kind of go from there. And then coming into the afternoon, you just, again with Fibs, you just kind of see what sticks. So you have all-time highs up here. You have this obvious swing low. This is the low that broke this high, and then you just take a fib from here to here, and this green line. So I do not want to just be shorting willy-nilly into this area. So you can see we have a high, a low, a lower high, a lower low, and then this high gets broken, and then we get a new set of red dots here. But we've had a little structure shift here. If this high had been kept in contact, I would be more interested in using red dots to continue lower. But you just want all this stuff to align. You know, these fast moving averages, this 8 and 20, green and red, these flipped. So that was bullish. So when signals get mixed, I'm more keen to kind of stay on my hands and not try to push it. So you have this shaded box. This is the 50% area, which I expect. I don't expect this to hold, but it's just an area I want to be cognizant of, because on a higher time frame or even lower time frames, but you have a 50 to 61.8% level area that a lot of the times this can be an area where price reverses. And so we've had a downtrend all day. We come in this 50% area on a 15-minute, hourly, whatever you want to call it. You got a little structure shift here. This isn't a screaming buy. It looks like the buy is working, but if anything, I want confluences to line up. And so the red dots, it's not an ATM machine. You want to use them in conjunction with other things. And the fact that we are in this 50% kind of support area, 51 to 61.8% support area. We had a market structure shift. This high was broken. It doesn't matter that dots flipped red here. Could they have worked? Sure, but I want to trade with the wind at my back. I want other confluences to line up to give me confidence to take setups with the dots, and there are too many variables that weren't in line with shorts here. So this would have been a setup that I avoided if I wasn't done for the day already. So again, I didn't have a plan for that video, so just kind of talking through my process today. Feel free to reach out with any questions, and thanks.